Hello and welcome. You're watching The Mining Show, brought to you by Blytheweigh on Core Finance. I'm Charlie Gibson. Now, consistent with our policy of bringing you companies whose share prices have appreciated, well, in this case, it's appreciated by 20% in sterling terms over the last month. And, well, obviously, if you annualise that, it's a large figure. To discover how we've done it, in this particular instance, the company is Caledonia Mining. We've got their Vice President of Corporate Development and Investor Relations, Maurice Mason. Maurice, very good morning to you. Thank you very much indeed for joining us.
Thank you, Charlie.
So tell me, share price up by 20%. You must be pretty happy over the course of the last month.
We are happy. There's been a range of news stories that have come out, some of which are within our control. We had a good set of financial results, with which I think my colleagues were here discussing separately. Very strong operating cash flow, and then more recently some developments in Zimbabwe, which are continual improvement in the investment climate in the country, and we think that's contributing to investor confidence.
Now, one of them, and I'm assuming you're partly alluding to this at least, is the export credit incentive, which has just gone up from 2.5% to 10%.
That's
so
right.
Just explain to us how that affects Caledonia, and you know that differential from 2.5% to 10%, what it actually means for you.
Well, effectively, the government is now paying us 10% of revenue for all of the gold we produce as an incentive to grow the export industry. So Zimbabwe has a significant shortage of foreign currency, and therefore exports are critical to bring in foreign exchange into the country. There's been an export credit incentive in place of 2.5% for some time, and that's now increased to 10%. So effectively, that is a royalty of negative 5%. There's a 5% royalty that applies in the country on revenue, and then a 10% export credit incentive that effectively means a royalty of negative 5% for as long as the situation continues.
So if we take the gold price to be $1,300 an ounce, if you were to export 1 ounce, you would have to pay, what, $65 in royalty to the government, and you would get $130 back from the government. So you would actually be selling gold at $1,365 an ounce.
That's roughly correct.
In simple terms.
A little more complex than that because of certain payment conditions, but yes, that's roughly correct.
Can the government of Zimbabwe afford this, I suppose, is one of the obvious questions. I'm sorry to put you on the spot there, because of course you're not the spokesman for the government in Zimbabwe, but I'll put you on the spot for the moment.
Yeah, I think you'd have to ask them. We are cautiously. We welcome a development that encourages investment in the sector, and as long as it continues, that is very positive for investment in the country and for the sector. And we think it will contribute in the mining sector in general to bringing in increased export revenues. I don't know how much longer it will stay in place. The monetary policy framework, I think, lasts for about a year. It's been in place since February, and it will likely continue for 2018, and then we'll see what happens. I don't know how affordable it is, but it certainly at the moment makes Zimbabwe's fiscal terms probably some of the best in Africa.
So, I mean, talking more generally about, Zimbabwean conditions, obviously, we had the change in leadership at the end of last year. Have you seen this manifest itself in a change in either the attitude of the workforce or the environment that you're working in terms of your procurement or whatever? But has it yet manifest itself, I suppose, in terms of your operations on the ground? Can you see a difference between now and, say, 5 months ago?
Yes, we can. Not so much in attitude or operating environment, for the simple reason that's always been quite good. We've had good worker relations on mine. We've had, we employ 1,400 Zimbabweans, and on the mine village there's over 5,000 people who are sustained by the blanket mine. So not so much, it's always been a fine place to operate, and we haven't seen a change in those conditions. There's been, I suppose, two significant changes. One is the attitude of the investor community, which is now starting to look differently at Zimbabwe. I think that will still take some time. It's only been 5-6 months. And I think the investor community is likely to look differently at Zimbabwe. It's very geologically prospective. And two, we've seen two significant concrete changes, the one being the royalty, or the export credit incentive adjustment, which was announced this week. And then secondly, a change to the country's indigenization legislation, which previously required local Zimbabweans to own 51%, and for the gold mining sector that is no longer in place. We comply with that legislation currently, and will continue to comply as long as the current owners of the asset want to remain as shareholders, but there's no longer a legal requirement for people to own 51, for local Zimbabweans to own 51% of the asset. So those are two very significant changes in legislation which have, the new leadership in the country have followed through with their stated intentions and have enacted these changes into law.
Am I right in thinking there's a rights issue going on between the blanket mind and your Zimbabwean subsidiary?
That's correct.
Is that all part of that change in the indigenisation laws, or not really?
Well, it could be if the local indigenous partners do not choose to follow their rights. And
do you have a preference whether they do? Or, because I suppose they could come back to you and say, could you lend us some money to finance our take-up of the rights?
They could. I think we'd obviously have to consider that if they request that. I doubt that would be the situation. But we're ready to underwrite that rights issue as a blanket shareholder. So Caledonia, as a shareholder in blanket, are ready to underwrite that rights issue. And if the local Zimbabwean partners do not follow their rights, then it is possible that we could increase our stake in the asset to probably around about 51%, I would think, if the rights issue is not taken up by the indigenous Zimbabwean shareholders. Importantly, though, that $4 million, which will be going into blanket, is going into exploration on our satellite properties. So it's a direct decision on our part, because the investment climate is now much more attractive, and we are seeing these concrete changes afoot and a change in the investment climate. We've always known there's plenty of gold in the ground around Zimbabwe, and we've previously been a bit more cautious with our capital allocation, but now that we see certainly the export credit incentive and changes in indigenisation legislation, we feel it's a much more attractive investment environment, and we don't want to be left behind with the growth in the sector.
Does that mean you're throwing geologists at the ground, or are you looking slightly more large scale? Do you think there could be some corporate activity? A few assets up for sale, I think, in Zimbabwe, aren't there? A few gold mining assets.
There are some gold mining assets which we are aware of and continue to look at. It's obviously an ongoing evaluation process, and there's a few assets which we like the look of. And I think if they have willing sellers, we would obviously be interested in having those discussions. The $4 million we're looking at investing in terms of throwing geologists at the ground is exactly that. Is $4 million, which will be going into our own properties that we own that surround the blanket area, that if the exploration is successful, could provide satellite feed for the blanket mine. So that's our immediate focus. But certainly, if there are assets in the country that we would like to invest in, certainly, and if those assets are for sale and provide the returns that our shareholders require, we'd certainly look at them.
We talked about dollars per ounce and what the change in the export credit incentive means, and of course we naturally talk in US dollars. We went back a few years, we used to talk about Zimbabwean dollars as well. There is this constant question, isn't it? Will Zimbabwe recreate a new Zimbabwean dollar? Is that something that you perceive is on the horizon?
I think it's unlikely in the short term. And when I say the short term, I think probably certainly the next few years. I think it's unlikely. Zimbabwe, if they ever did reintroduce their own currency, would need adequate capital reserves at the Reserve Bank, which would be key to reintroducing their own currency in order to be able to support it.
And presumably, this is part of what they're doing is an attempt to create gold as Zimbabwean bank reserves.
Absolutely. Well, either gold or dollars to boost foreign exchange inflows into the country, which would then be critical for the central bank to bolster its dollar reserves. I think the governor of the Reserve Bank was questioned. It was either the governor or the finance minister. I could be wrong on those. But was questioned about introducing their own currency, and they said it was not.
Godfrey Gono, the Reserve Bank?
No, that was Gideon Gono.
Gideon has moved on.
Moved on. But they were questioned about reintroducing their own currency, and they said that was not in their short to medium term agenda. Longer term, we'd have to see, but I think the gold mining industry continues to be dollar-based substantially, certainly in terms of revenue. And if there were changes in the local currency, we would obviously comply with that. We don't see that as a big as an issue that we give too much attention to.
I see that Zimbabwe is going down this route and I think at the moment it's a sort of a broad statement of intent, but they would like operations in Zimbabwe to be listed in Zimbabwe, and there was a sort of precursor to this in Tanzania as well. Have you noticed a change? Do you have any details on what's happening there and how you might react to it?
We don't have any details. We've seen that this morning. We're agnostic about having a listing in Harare. It's not a concern or a particular encouragement for us. So if there was a requirement or at least a wish on the part of the Zimbabwean government to have listings in Harare,
is there enough money in Zimbabwe to the pension fund money to
that's the issue.
Right.
That's the issue. I think there's two key questions. Is the capital available in Zimbabwe to fund or to meet the very deep funding requirement that this industry needs in order to grow? So, and from what we've seen, I'm not an expert on Zimbabwe capital markets, but from what we've seen, there isn't the depth of capital available in Zimbabwe. The industry and the country desperately needs foreign investment, foreign capital pouring into the country to grow the sector, and therefore, if a listing in Harare could provide additional capital, we would look at that, and we're not averse to that. 51% of the Blanket mine is owned by local Zimbabweans, so there may be an opportunity there. But I think the very important case is if the Zimbabwean mining industry is going to grow, it's going to need foreign capital. People forget that back in the 80s and 90s, Zimbabwe was one of the biggest gold producers in Africa. It was bigger than Tanzania, it was bigger than Mali, it was bigger than Burkina and Ivory Coast, and it suffered from a lack of foreign investment when other countries have absorbed that foreign investment and grown their industries, and the results are clear to see in those other countries. So Zimbabwe has some catching up to do, and it's going to need foreign capital to do that. And so therefore, I don't see the Harare Stock Exchange being the only solution, but if it's part of the solution, we would look at that as and when that was appropriate.
Now, I've got to apologise because I put you on the spot, and I've asked you effectively to stand in for the Zimbabwean government on a number of occasions. I said, what do you plan to do? But tell us a little bit about Caledonia. I mean, just in terms of the outlook over the next 6 months, and then I suppose, critically over the next, really 3 years, where you're hoping to get production up from 60-ish thousand ounces a year to 80,000 ounces a year?
Yeah, guidance this year is 55 to 59. We hope to hit the high end of that guidance, but we're guiding a range of 55 to 59,000 ounces. The next 3 years, we are investing quite heavily. There's 2 more years of substantial capital investment to get the mine to 80,000 ounces. The plant is already big enough to handle the tonnage needed for 80,000 ounces, so it's a question of going deeper, accessing ore resources which we know exist at depth, and building additional production levels, effectively building a new mine underneath the current mine. We're well advanced in that project, and it'll be in production in 2020, and we'll produce 80,000 ounces by 2021 with the new central shaft. So that's what the 3-year agenda looks like. In the shorter term, with the changes to indigenization legislation, we are, and we announced this in our recent results that we have discussions ongoing, but we are interested in seeing if we can acquire a larger percentage of Blanket. We currently own 49%. If our indigenous Zimbabwean partners are willing sellers, we would be willing buyers on a price that would make sense to both parties. So that would be something which, hopefully, if there is a willingness to transact with some of our indigenous Zimbabwean partners, we would like to see a greater share in the asset. We've currently got 49%. It's a great mine, and we'd like to have a bigger slice of that. But I think it's important to note we think it's important to keep some local ownership. I don't think we'll get to 100%. It's very good for us to have the community, the Gwanda community, and the Blanket workers involved in the mine. So we think that shareholding makes good business sense, and we'd like to keep their involvement. But some of the other shareholders, if they're willing to sell, we'd be willing to buy.
Excellent. All right, Maurice, thank you very much indeed. That was Maurice Mason, ladies and gentlemen, the Vice President of Corporate Development and Investor Relations at Caledonia Mining. As I say, Caledonia Mining, whose shares have gone up from £5 to £6, so in hard currency terms as well, up by 20% over the course of just the last month. As I say, I'm afraid that's all we got time for, but join us again next week where we'll be bringing you more companies with hopefully exactly the same sort of prospects and also history as well. That's all from me, Charlie Gibson. I'm signing off for the Mining Show brought to you by Blytheweigh on Core Finance. Until next week, you have a capital day.